Hello, traders, and welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. A beautiful day provided for by HFM. In the spirit of 15 years celebrating, we do have a few promotions. But before we do get underway, I would want us to start with a disclaimer whereby the information here is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets look at a degree of risk, but no worry. I'm here to help you maneuver the markets in the right way. Starting us off with the promotions that we currently do have. This is the final trading day monthly candle of September. We are going to say goodbye to September today, and tomorrow we are going to start a new calendar month. And this is very important for us traders because to note the markets did end. How did it start? How did it progress? And how it did end. Now, when you look at the promotions that we do have currently at the moment, when you go over to the demo contest currently at the moment, and you do under the promotions tab, you click on read more. The promotion is going to end today, whereby the Eurozone now raises the first one who has a 3,161% gain of their account, whereas Austin Mulabu has a 477.31%. Now, number one is going to walk home with $500, number two, $300, number three is going to walk home with $100 credited to the account. Now, once again, this competition is going to end today, meaning tomorrow the demo contests are going to start over, which is whereby it presents you the chance to be on the leaderboard once again, trade from demo to live, virtual to real demo contest. Once again, you have an opportunity to participate in the demo contest where there's no monetary risk for you, just exciting rewards, showcase your trading skills in a risk-free environment for the chance to win a unique crystal beliefs and some amazing trading bonuses. Once again, the promotion is going to start tomorrow, whereby number one is going to walk home with $500 credited to their account. Number two, $300 trading bonus. Number three, 100 trading dollars credited to their account. Once again, this is available up for grabs because the competition is going to end today, meaning tomorrow we are going to start over again. Now, looking at the promotions, we still have the pure gold giveaway, which is currently running. Have 8 days, 2 hours, and 27 minutes, and counting us by the time of recording, whereby you have a chance to walk home with 10 grams of pure gold. You are going to have unlimited winners, and I'd like to see who's going to walk home with pure, tangible, real gold. Once again, all provided for by HFM. Now, we do have Battle of the Elite, and this one is bigger. This is round one still. We have so many rounds to come, whereby number one is going to walk home with 650,000 Kenyan shillings, which is equivalent to $5,000. Number two is going to walk home with 260,000 Kenyan shillings, equivalent to $2,000. Number three is going to take home $1,000. We're going to have 10 winners in the lucky draw who are going to walk home with $200 each. How do you join? Step number one, go over to HF under promotions, go to the Battle of the Elite and join the promotion. Open a Battle of the Elite trading account and deposit at least 100 United States dollars. Trade any asset and rank in the top 3 traders by percentage wise. Once again, 10 people are going to be in the lucky draw who are going to walk home with $200 each. That is equivalent to 26,000 Kenyan shillings. My lord. Number one, you do have Nancy currently at the moment who has a 202.65% gain on their account. Muitalan has been really consistent on this leaderboard with 87.61. We have Fabian at 0.7%, meaning if you deposit $100 today, open a Battle of the Elite trading account, you have an opportunity to win the leaderboard $1 out of that account. Meaning you could stand a chance to win the $200 in the last draw. Now we do have also the Shield 500 account in the spirit of 15 years providing new traders with the platform with the right products. We are going to offer you an account called the Shield 500. Now, this account is very interesting because you have an opportunity to open and deposit between $100 and $500. And this is the most interesting thing. If you're doing car losses within the first 25 days, going you up to $500. Beautiful, isn't it? Now, let's get it over and start our morning market call, whereby whenever we wake up in the morning, We usually start with the economic calendar and then we generate our ideas from here. This is whereby you're going to look at what are some of the assets that you need to pay close attention to. Now, today in the morning at exactly 4:45, once again, when you go over to your HFM, logging into your HFM, whereby you have an opportunity to look at what are the key fundamental news releases that will push prices, meaning it's going to provide you, the trader, with opportunities to look for probabilities in the markets. Now, starting off today early in the morning, at exactly 4:45 Nairobi time AM. This is whereby we did have PMI data coming in for China, whereby we did have the manufacturing PMI for September and then the services PMI also for September. As you look at these bars over here, this is high volatility anticipated in the markets, meaning when this news was released in the markets, we did anticipate high volatility. Now, looking at this information, how do you interpret it? If you click on the title here, it's going to bring up a description about what PMI is. Now, this is the Purchasing Managers Index, which is released monthly basis by Kaizen Insight Group and S&P Global. It's a leading indicator gauging business activity in China's manufacturing sector. The data is derived from surveys of senior executives at both private sector and state-owned companies. Now, survey responses reflect the change in the current month compared to the previous month, if you're looking at it on a month-on-month release, and can anticipate changing trends in official data series such as GDP, which is gross domestic product. Now, data above 50 usually indicates that the markets are expanding. Okay, a reading below 50 indicates that the markets are usually contracting. Now, if it comes out above 50, it means it's bullish for the Chinese yuan. If it comes out lesser than 50, it means that it is bearish for the Chinese yuan. Now, when the data is usually released, there is this tab here that usually pops up, whereby you have an opportunity to read the official report. If you click on it, it's going to open a new tab, and this is the tab that's going to pop up, whereby you have the opportunity to look at the data that was just released. You want to look at general manufacturing PMI and the services PMI. If I do click on manufacturing, it's going to open another tab whereby this is the official document that was released at exactly that time. You can see 1:45 UTC. If you are in Nairobi, 11:45 AM in the morning, and you can see user releases on board until that specific date in time. Now, this is the rating of China General Manufacturing PMI, which is going to look at how manufacturers did work in the previous month. Now, September 2025, which is the data that we're looking at, production growth did accelerate to an above average pace. For total new businesses, they did rise at its quickest rate since February, as average selling prices did decline in September. Now, you'll want to look at the comment section, whereby this is from the founder at Rating Dog. Rating Dog is the owner of this news release, and the name of the guy is Yao Yu, whereby he did mention the Rating Dog China General PMI rose to 51.2, which is above the 50%, which is above the 50 mark, which indicates that the economy generally is expanding in September and signal a sustained improvement in manufacturing. Notably, the sub-indices for both demand and production remain in expansion territory. On the demand side, new orders did perform well, while new export orders returned to growth for the first time since March of 2025. Although new export orders rose only modestly, it was still a relatively positive signal, alleviating market concerns over the recent weakness in exports. Now, what are some of these recent weaknesses? This was the result of the tariffs that were implicated to China as a result of the exports to the United States. Meanwhile, output continued to expand and purchasing activities saw the largest increase of the year. Overall business confidence also strengthened again in September. The pace of input material inventory accumulation did slow down, while finished goods inventories build. Very interesting to note. Yes, the export did slightly slow down, while the finished goods inventories continue to build upon. On the pricing side, input prices continue to rise, with survey respondents often pointing to higher costs for metals and meat as the main drivers of inflation. Meanwhile, output prices would stabilized last month, fell back into contraction in September. Though the decline was relatively mild, employment continued to contract due to manufacturers' concern about rising costs. But the pace of job shedding did soften, supported by accelerating new order growth. Overall, September's PMI improvement was more broad-based, while output prices and employment continued to decline, while other major sub-indices posted in expansion territory. Under the influence of the anti-involution policy, input prices continued to rise, while output prices showed a moderate decline, pointing to pressure on profits. Now, when you look at China, China is a very interesting economy whereby they do export more than they do import. Now, whenever this data comes out positive in terms of manufacturing, yes, production is number one, but selling is number two. Whenever they are producing, let's say, for example, machinery, we are seeing that there's build-up in inventory. They are producing, but for the goods that have been produced, they have to sell the mic. They have to sell the products, okay? And this is very interesting for us to note, whereby we will also want to look at how this is going to affect the Chinese yuan as time moves on. Now, there were two news releases that were released at that particular moment in time, whereby we did have the manufacturing PMI, and then at the same time we did have the general services PMI. So the first one was manufacturing, then this one is services, whereby we would want to look at, okay, how is the services sector in the Chinese yuan? And we would also want to look at the comment from the founder, whereby looking at it currently at the moment, September 2025 did turn in new businesses supported by faster rise in exports. Business confidence climbed to 6 months high. Very interesting. This comes after the implications of tariffs, whereby staffing levels did decline at its quickest pace since April of 2024. Now, the comment from Yao Yu, once again, who's the founder at Red Dog, did mention that services PMI did fall to 52.9, but it's still above the 50 mark, which still shows expansion and indicator that the pace of expansion did slow only slightly from August. Now, it's positive to see that demand for services remains solid in September. New export businesses expanded for the third consecutive month, with surveys feedback indicating that the recovery in the tourism sector was a key driving factor. Although growth in total new orders eased from the previous month, it continued to show a strong expansionary trend. Beautiful. Future businesses activity expectations remain at a high level, with the reading rising continuously since April of 2025. However, the contraction in employment intensified, okay? People losing jobs in the Chinese region, primarily due to the control measures such as staff resignations and redundancies. When it comes to price indicators, prices continue to rise moderately after fluctuating around the 50.0, no change point since July. Output prices returned to inflationary territory this month. The recent volatility in selling prices was mainly due to diverging prices, whereby among firms, some raised concerns to pass on additional cost pressures. Now, with the previous meeting that Jerome Powell did have last week on Tuesday, he did mention that, okay, there have been implications of tariffs, but currently at the moment, we are seeing the importers bear the costs, meaning these costs are not being passed down to the consumer currently at the moment as of yet. But in the near future, could we see these costs now being passed on to the consumer, whereby as a result of these profit margins in the services sector remained under pressure? While this trend has not yet seen a fundamental improvement, the overall pace of narrowing has been compared to 2024. Overall, both supply and demand in the services sector remained in expansion in September, supported by the improvement in external demand and rising business confidence. However, the sustained contraction in employment and pressure on profit margins remain constraints factor in the sector. From a short-term perspective, compression of profit margins has not significantly weighed on the headline PMI. We expect the services PMI to expand in the near term. Now, that final statement is very important. We expect the services PMI to continue to expand in the near term. When you're looking at fundamentals, basically you're asking yourself, should this data enable me to look at buying or selling opportunities on that specific currency? In this particular case, we are looking at the Chinese yuan. If the data comes out positive, and we do anticipate services PMI to continue expanding in the near term, it means that if I go to my charts, I would want to look at the Chinese yuan and go look at those assets. Okay. Now, fundamental analysis is going to tell you what price is and where price should be. It's not going to tell you how it's going there, but it's going to tell you how prices will move in the near future, which is very, very important whenever you're looking at price action in the market. Okay. Now, I want us to continue with the economic calendar, whereby after the PMI data, the manufacturing PMI and the services PMI that was released at exactly 7:30 a.m. in the morning, we did receive the Reserve Bank of Australia rate statement, the interest rate decision to be exact, whereby the previous number was 3.6%. We are having a consensus of 3.6, and actually the Reserve Bank of Australia held interest rates at 3.6%. Now, there are reports that are usually released supporting why did they do that. Now, when you look at the Reserve Bank of Australia, any central bank to be exact, these are the leading forex participants, and one of their main mandates is to offer forward guidance. After they set the interest rates, they usually offer forward guidance. Where do they see the economy generally headed to? Which is very important because for you as a trader, especially if you're a day trader or a swing trader, this is going to give you the overall trend of the markets. Whereby, once again, if you do click on the RBA monetary policy statement, it's going to give a brief description about it. Then there's going to be a tab here for the read official report. If you do click on it, it's going to open another tab for you, whereby we would want to look at the tone. Now, this is what is going to pop up. When you click on the monetary policy decision, you can see this is the video that was recorded at that particular moment in time. We would want to look at the statement by the Monetary Policy Board, which is going to open a new tab. And this is the document, this is the introduction document that they did read exactly today when its meeting did start. Now, at its meeting today, the board decided to leave the cash rate unchanged at 3.6%. Inflation has fallen substantially since the peak of 2022, as high interest rates have been working to aggregate demand and potential supply closer towards balance. Both headline and trimmed mean inflation were within the 2 and 3% range in the June quarter. Recent data, while partial and volatile, suggests that inflation in the September quarter might be higher than expected at the time of August statement on monetary policy. Now, the domestic economic activity is recovering, but the outlook remains uncertain. Now, data for June quarter show that private demand is recovering a little bit more rapidly than expected, taking over from public demand as the driver of growth. In particular, private consumption is picking up as real households' income rise and measures of financial conditions does ease. The housing market is strengthening, a sign that recent interest rates increases are having an effect. Now, credit is readily available to both households and businesses. Whenever a central bank does lower their rates, it means they're encouraging borrowing. Okay. They're encouraging borrowing. Basically, they're advocating for people, go to the banks, take out loans are going to be cheaper, go sustain yourself, go build yourself. Now, this is very important because it stimulates the economy. When they see inflation going down drastically below the 2 and 3% range, they would want to start stimulating the economy by advocating for more money to move in the economy. Now, housing is very important because today, later on in the day, we are going to have data coming in for housing in the United States of America, which usually creates a very big ripple effect. Whenever someone is mortgaging a house, they're going to know who are going to broker the deal. There are going to be loans which are going to be taken out of those banks. There's going to be furniture that is going to be bought for that house. There's going to be a lot of money in circulation just as a result of one house being sold. Whenever we see housing move to the upside, it means that, okay, more money is anticipated in the economy. Now, various indicators suggested that the labor market conditions have broadly stayed in the recent months and remain a little tight. Growth in employment has slowed slightly more than expected, but the employment rate was unchanged at 4.2% in August. Beautiful. Measures of labor underutilization remain low rates as businesses, surveys, and liaisons suggest that availability of labor has been little changed of late. Looking through quarterly volatility, Wages growth has eased from its peak, but productivity growth has been weak and growth in unit labor costs do remain high. Now, this is whereby we will now want to pay close attention to. As a result of all of the data that they are seeing, what did they do? With signs that private demand is recovering, indications that inflation might be persistent in some areas, and labor market conditions overall remain stable, the board decided that it was appropriate to maintain the cash rate at its current level at this meeting. Financial conditions have eased since the beginning of the year. This seems to have an impact, but it will take some time to see the full effects of earlier cash rate reductions. The board did judge that it was appropriate to remain cautious, updating its view on the outlook as the data evolves. What are these data? Basically, employment, inflation, the PMI data. The board remains alert to heightened level of uncertainty about the outlook. It noted that monetary policy is well placed to respond decisively to international developments. When you look at Australia, they do have a lot of resources. And if the global economy is not in a good position, it means that also they are not going to be in a good position. When you look at, they do have a lot of reserves in iron ore. Now, they do export this iron ore into countries like China, the United States, and neighboring countries. If these other countries are not doing well, it means it's going to impact their profits. If they were to have material implications for activity and inflation in Australia, the board will be attentive to the data and the evolving assessment of the outlook and risks to guide its decision. In doing so, it will pay close attention to developments in the global economy, once again, and the financial market. Now, today's policy decision was unanimous in maintaining the cash rate at 3.6% at the moment. Going back to the economic calendar, what does this mean? If the central bank is going to hold their interest rates, you do anticipate the currency to be trend as a result of capital inflows into that particular economy. And we are going to look at the chart of AUD USD, whereby we are going to understand what did happen as a result of that. Now, they did have a press conference at 8:30, whereby this is the speech, and usually there are question and answers. And the question and answers usually have most of the volatility. Later on in the day, we do have retail sales, which was just released for Germany, which is part of Europe. Now, you'll want to look at data from Germany because this is important. Germany accounts for more than 25% to 30% of GDP in the Eurozone. Whatever happens to Germany, 25 to 30% of the Euro is going to be affected. We have seen the data coming slightly worrying, whereby import prices did move to the downside. We were anticipating a negative 0.2. The data actually came in worse than forecast at negative 0.5. Looking at retail sales, this is the year-on-year release from August last year, whereby the previous number was 1.9%. The data was released at 1.8%. Retail sales on the month-on-month release again did go down drastically from a consensus of 0.6% to the actual data coming out at negative 0.2%. Then we had Denmark releasing their data also. So looking at this information, we're going to look at euro in just this time, which brings me to this question whereby we have just started the segment where I would want you to interact with me. Which are some of the assets that you want me to look at in the markets? With HFM, we have over 1,000 instruments that you can trade. Over 1,000. I cannot look at 1,000 instruments, and I want you to help me in which are some of the assets that you want me to look into. Now, we did have GDP coming in for the quarter-on-quarter numbers for the British pound, whereby GDP has actually improved on the second quarter of this year, whereby we were anticipating a number of 1.2%. The data actually came out at 1.4%. New York session is going to be relatively quiet. We don't anticipate a lot of activity as a result of major news releases, except for the housing price index, which is the month-on-month for July. And we do have the JOLTS job opening and the consumer confidence. Once again, this is going to be very active to see how New York session is going to play out. Once again, today is the final trading day of the monthly candle, and we want to look at how the markets are going to close. Which brings me to the next segment, the one that you like looking at mostly, which is the technical charts. This is whereby money is usually made in the markets. Now, I want to share my screen here. Beautiful. Let's look at if there are any questions from Instagram. If you want me to analyze any market currently at the moment, I would want you to engage with me. Good stuff was there yesterday. Beautiful, beautiful cloud nine. Okay, UJ and EU. USD JPY. Where is USD JPY? Here you are. I'll want to start looking at the 1 hour time frame. Let me zoom out of this. Now, on the commitment of traders, this was when the United States did decide to lower the interest rates. This was back on 17th of September. And we did see the United States dollar gain against the Japanese yen. But very interesting thing to note about the Japanese yen is that as of last week, we saw institutions add a lot of positions to the Japanese yen, especially long positions. And looking at it currently at the moment, today is Tuesday. Look at where the markets did open. This was Friday, the 26th, and this was 29th, which was yesterday, Monday, whereby Friday basically consolidated, but before the week did end, it closed below the opening price of Friday. Then the markets opened yesterday during Asian session. We saw the prices move to the downside very aggressively for the entire of Asian session and London session for 21 hours. This is 30 minutes. So for more than 10 hours, for more than 12 hours to be exact, prices did move almost 100 pips to the downside on the dollar against the Japanese yen. And then the markets entered into a period of consolidation afterwards for quite some time. Now, Asian session, when it opened today, we did see prices move slightly to the upper side. It did tap into the highs that was created during New York session. These are the highs that was created during New York session yesterday. And then the markets aggressively moved further to the downside, breaking the lows that was created once again during New York session yesterday, meaning institutions are favoring more selling opportunities against Japanese yen. Now, this Saturday, the Japanese economy is anticipated to go and vote prime minister, which is going to be very, very important for us traders, whereby new people are going to come into the seat, and we'll want to look at how this is going to affect price action in the near future because of their monetary policy. These people who are going to come in next are going to have the different opinions where the monetary policy. We want to look at what they have to say about the future economic outlook. Now, looking at UJ, prices could be bearish currently at the moment, anticipating that more opportunities possibly coming back down to these regions that we did have at around 147.506 at the moment. If we do close below this region on the day, there's a high likelihood this week is going to be very good in terms of the Japanese. And once again, looking at the commitment of traders, we did see institutions add a lot of long positions to the Japanese yen previously. Now, looking at EU, Euro, now, the euro has been facing a lot of political uncertainty. The data has been coming out not that good. When you look at, for example, France and Germany, the data has been really worrying of late. And as a result of that, we have been seeing the dollar gain a bit of strength against the euro, whereby throughout last week, we did see strength in the dollar as a result of prices moving to the downside. But coming in yesterday, we did see the euro gain quite significant. And today we are going to have ECB Lagarde speech, which is going to be at exactly. Let me just look at it here. We are going to have a few members of the European Central Bank. Exactly in the next 4 hours, 52 minutes, we are going to have ECB President Lagarde speech, which is going to be at exactly 3:50. More than 50 minutes after New York session does open. I want to look at what she has to say about the future economic outlook of the markets currently at the moment. Looking at price action, I would want to be very careful if prices do break above these highs. I would want to look at more long opportunities on the charts, anticipating that if it will break the highs at 1.17498, there's a high possibility prices will continue moving to the upper side. We do have resistance around that particular region, and if you do get a candlestick that closes above this region, I would want to look at more buying opportunities on Euro USD. But at the same time, if you do break the lows that we do have currently that did form during Asian session today, I would want to look at more selling opportunities. This all is going to be dependent on the incoming data that we are going to receive. Do we have any questions from East Africa? I would want to look at gold. Looking at XAU ever since the Asian session did open yesterday, we have seen the precious metal move to the upper side. Prices, the markets are still rising for two more interest rate cuts before the year does end. We have seen prices move more than 1,000 people upside from 37.58 during market open yesterday to 38.70, quite significantly more than 2.97% of the total value of XAU. Now, when the markets did open during London session earlier, 2 hours ago, we did see bears coming into the markets, and this is going to be very crucial for us. Remember, once again, this is the final trading day of the monthly candle, whereby we will want to look at how the markets are going to close as a result of the month data that has been released. Now, today, once again, the markets are going to close the monthly candle. Tomorrow, we are going to begin a new monthly candle, meaning we are anticipating non-farm payrolls on Friday, which is a very, very high impact user release, whereby investors, markets will want to look at the incoming data. How is inflation? How is employment currently at the moment? We have been seeing employment numbers come out really low, of late, whereby for the first time in more than 4 years, we did see numbers coming out less than 100,000 jobs being created in the United States of America in the previous 2 months. Now, NFP numbers that are going to come out later this Friday, very, very important. As you can see, currently at the moment, we have a lot of volatility whereby the markets are aggressively printing out as a result of the data, the final rush of the monthly candle. If there are no more questions, I will going to look at Instagram, Kenya. There are no more questions. Okay. That's going to be it for me. I shall see you tomorrow on the next segment. Take care of yourself. Once again, risk management is going to be very important for you as a trader to enable you stay in the markets for long enough so that the probabilities does play out in your favor. Take care of yourself. Stay safe.